What's the goal of technical analysis?
What's the goal of technical analysis? Well, I define it as the study of trends and turning points. So I'm looking for a trend, and then I want some knowledge of when that trend is going to stop. So I look at price, and I look at momentum of the price. And I use a concept called divergence, where if a market is falling and the momentum is rising, in other words, it's like you being in your car and you're slowing down. If you're in your car and you're slowing down, then there's a higher probability that you're going to stop and maybe turn than if you were speeding up. So if the price is falling and the momentum is increasing, then that means there's more downside to come. However, if the price is falling but the momentum is slowing up, then there's a high probability of a turning point. And that's what's called normal divergence. Similarly, if the price is rising but momentum is slowing up, then there's a chance that there's going to be a turn. And in the US market, for example, at the moment, the Dow has broken up, S&P has broken up, but unfortunately the momentum indicators haven't been able to break up with them. So there's a little bit of bearish normal divergence. There are 4 types of divergence, and I've spent a long time looking at divergences between price and the momentum of price. In technical analysis, there's 1,000 indicators that measure the rate of change of price, momentum, and they're all pretty much the same. There's things called rate of change, there's momentum itself, there's RSI, there's stochastics, there's MACD, there's a host of them. I once designed a piece of technical analysis software, this is in South Africa, and I had 20 indicators on it. And of course I get blown out of the water by an American competitor that had 100 indicators. Now the 100 indicators were saying the same thing as the 20, but people said, well, clearly if there's 100 on it, it must be better. So a measure of momentum. So I think that you can look in technical analysis you can look at price, we can look at momentum, we can look at volume, very useful. And we can look at time cycles. Time is the most difficult of the lot. Wall Street has looked at everything from astrological cycles to moon cycles to the length of ladies' dresses to try and get a feel for time cycles. So those are the 4 things that we can look at. Richard Wyckoff, that I spoke about earlier, looked very strongly at price and volume, and he's done some very detailed work in putting price and volume together. I think the other thing that we look at in VectorVest is the breadth of the market, and again lots and lots of American workers have looked at the advanced decline line, and it's all about trying to find a trend and then being able to work out when that trend is about to stop.
Now, there are some people out there that think technical analysis doesn't work at all. What would you say to that?
Well, that's great. I have no problems with that whatsoever. We don't trade markets, we trade our beliefs about markets. So if those people have got that strong a belief in that, then it'll never work for them, that's for sure. There are some very advanced esoteric theories in technical analysis that are quite difficult to put into practice in terms of a structured trading plan. But I don't know many people in the city that make decisions without actually having a look at some form of technical analysis, some form of elegant level. So I think that comment is quite misguided.
And why do you think it works?
We really don't know that something is going to move up the page until it at least starts to move up the page. We can have all sorts of really flashy theories about value, there are many. I know a fellow who's lost his career as a fund manager based on a value trap. He bought this share because it was on a PE of 5, and he says this must be the greatest buy in history, and he bought a heap of them because they were cheap, and 6 months later they went bankrupt. So and he lost his company based on that. By putting together good fundamentals and some simple trend-following tools, you can in fact push your hit rate up enormously. So I'm not saying that you need to do advanced GAN analysis or start to count Elliott waves, but just some simple technical patterns in shares with good fundamentals, and you can put yourself into a position where you're getting it right 75% of the time. If you're right 75% of the time, you're only wrong 25% of the time. That minimizes the clusters, so you'll find the journey is emotionally not that difficult. If you're trading with fundamentals alone, for example, the value players, they've had a lousy 3 or 4 years, whereas the momentum players have done quite well. So if you're a value player, you've got to sit for a very, very long time until that value is noticed by other people. And if you've got, if you're managing somebody else's money and you have a bad year, you'll find very quickly that all of those people that said we understand risk don't quite understand as much about risk as they thought. And you'll find that these telephone calls are quite acrimonious and that you holding the telephone out here and the plastic's melting in your hand. Okay, so momentum works, but putting momentum with the fundamentals gets you the best of both worlds. The big money, this big city money will have a belief that the technical analysis is like reading the tea leaves. Okay, and that's largely because they've tried it once and it didn't work. Okay, and that's because of those clusters, and they will take a view on something and they will die on that view. And they will sit and wait for years with your money until it turns around. And if they've got the fundamentals right, normally they make money after a while. So they'll sit and sweat it out. Sweating it out is how the city works. They'll sit and sweat it out and hedge it.